Welcome to this week's weekly technical analysis. My name is Joel Chandran. I will be presenting on the TSX Focus 5 stocks here at Train to Invest, gold, silver, and oil for the week of October 14th to 18th, 2013. Let's jump right on in. Here we have the Toronto Stock Exchange, the 3-year weekly chart. And as you can note on the far right-hand side of your screen, we finally broke through this 13,000 mark that hasn't been breached since 2011, August, end of July. So it's been a long time since we've done that. So it's a 52-week high, obviously, for the index. And more importantly, we closed higher than we opened, and quite significantly higher. Looking at the MACD and MACD histogram, we can see the histogram bar for this week is obviously higher than the last, I would say, 5-6 weeks. The MACD is definitely growing, a good sign, showing that strength is with the index. Looking at the Rsi and Stochastic, we do see them both heading higher. The Stochastic is outside of the 80 range and almost at 100, so kind of topping near the high end of the entire range. But looking at the RSI, it's just above 60, still below 70. So there's room for the momentum to continue with growth in the index. Now, obviously, the new deal to get the U.S. government up and running has boosted the TSX for sure, especially in the States. We've seen the Dow, the New York all grow. So it's good to see that for the week, we've some definite improvement. The market needed some good news, and they got it. Looking at the 6-month daily chart, you can see Monday and Tuesday were fairly the same. Wednesday, Thursday, Friday, the index took off. Now, we see MACD in the MACD histogram. We have a MACD cross here, and that's obviously a good sign in terms of a buy signal. We also have the histogram bars growing sharply day by day. RSI is at the 70 mark and continues to have room to move higher. Unfortunately, we do have the stochastic kind of crossing down, but I would attribute that to hitting the high of the day and then slowly closing lower on Friday. On Friday, you do see that we did close higher than we opened. The TSX, it was up $99.73, or 0.77%, to stand at 13,136.09. 52-week high for sure. It can be a bit scary or volatile to think it's already breached through 13,000. What does the next week hold? Not exactly sure. Based on the indicators themselves, I would expect a bit of sideways growth over the next week or so, not the same acceleration we saw from last week Friday to this week's Friday. Looking at the TSX versus the indices, again, we have consumer discretionary in the blue, consumer staples in the red. Energies jumped quite a bit this week above the consumer staples, which is a huge jump because below it used to be quite below. Financials have been boosted quite strong throughout the week, and we also see the gold index, or sorry, the minerals index, the mining index, sorry, jump up as well. Okay. Materials are still down, gold is still down, but we do see the mining index jump up as well and just cross over the TSX. Now, for a while, we've been looking at the consumer discretionary and the consumer staples. I just wanted to show you the TSX 60 companies in the consumer discretionary index itself. As we know, the black is the index. The red is Gildan Activewear. TSX 60 companies, just also at the same level of growth. In the blue, we have Canadian Tire, and in the green, we have Magna. So really, Canadian Tire and Magna have, and I guess Gildan, have helped push the index higher. Thomson Reuters is in the brown here. It's still done 8.5% almost. Tim Hortons has done 12.2%, and Shaw Communications has only, quote unquote, done 8%. So while it hasn't quite outperformed the index, it still is growing, and it's pushing the index higher and higher. But Magna, for sure, at 53%, has really boosted the index higher over the 6-month period. Now, the Consumer Staples Index has really been driven by this jump in Shoppers Drug Mart. As you can see, we have Loblaws in the blue, Metro in the red, Saputo in the green, Shoppers in the orange, and George Weston in the purple. Shoppers has grown an astounding 37% over the last 6 months, and as we can definitely attribute that to the potential sale it may be going through right now. So that has really propped up the index much higher than any other company within here. We've seen Metro only grow by 2% or 2.5%, Saputo only by 5.4%. The double digits, we have George Weston at almost 14 and Loblaws at almost 15. The index itself is at 15.19%, and you can see 37% that raise comes from Shoppers. So just to show you a few of the TSX 60 companies that are really doing quite well. Obviously, if you do not know what the company does, do your homework, both fundamental and technical, before jumping in and trading the stock. Oil prices over the last 6 months have risen by $12.40 or 14%. As you can see over the last couple of weeks, definite downtrend, but still above 100. 100 does seem to be holding, which is a good sign for energy companies. Again, we'd love to see it go back up towards 110 because it means more profits, especially for the oil sands companies, as well as closing the gap between Brent crude and West Texas Intermediate. 3-year weekly chart for Enbridge. As we can see, we closed higher than we opened for the week. Obviously a good sign. Looking at the MACD, it should have been a red circle, but I gave it a green just to note that it's slowly starting to turn higher. 1, 2, 3, 4, 5, actually 6 weeks we've seen the histogram bars shrink on the negative side, and that's what we want to see. Strength is coming back into Enbridge, especially as we get closer and closer to the end of the year with the Joint Review Panel decision over Northern Gateway looms. RSI heading higher, lots of room to grow. Stochastic bottomed out and now is starting to accelerate quite rapidly. Lots of room for it to grow week over week. So things for Enbridge are looking good on the long term. 6-month daily chart, we have the Friday closing much higher than it opened. Always a good sign. In fact, it closed up 53 cents to $43.43, or a 1.24% increase. RSI and Stochastic both have room to grow and are both steadily heading higher. Monday, Tuesday, Wednesday, Thursday, Friday, not a lot of movement during the week in general, but today, as the rest of the market jumped up, so too did Enbridge. IMO, 3-year weekly chart, still working our way higher. We had beginning of the month pretty much 1, 2, 3 weeks declining, and now we jumped up this week, and we closed above the $45 mark, which is good, especially for in terms of support. MACD, the MACD histogram, MACD continues to trend higher, positive signs. What's even more positive is that we see the histogram bar is longer than it was the last 2 weeks. We want to see that trend continue to rise. Strength is flowing back into IMO, but then again, not a ton of room to close between 46 and 47.50, but again, still room to grow, what we want to see. RSI moving higher, stochastic advancing sharply, showing that momentum is flowing back into imperial oil. 6-month daily chart, as you can see, 1, 2, 3, 4, 5 days of steady increases. We looked at IMO last week, and it kind of was a dog a bit on its way down. But from last Friday to this Friday, almost $1 plus of growth. And so if you had bought IMO last week, you hopefully took some profit this week. We do, more importantly, have a MACD crossover, a strong buy signal, as we see the histogram bars continue to increase from Wednesday to Friday. RSI still appreciating, but the rate of growth has slowed. And stochastic, we're back at the 100 mark, so there's no more room for it to go higher. IMO looking quite strong with oil prices staying fairly steady. It increased by 0.7% or 32 cents to land at $46.25 close for Friday. Good signs in the energy sector overall, and we can compare that to the indices chart, which saw the energy index as a whole jump higher. Suncor, we pretty much closed at the $37.50 resistance line. Good sign, much better than last week. We closed higher than we opened. Another great sign showing that strength is flowing back into Suncor. MACD and the MACD histogram, we see the MACD continue to be positive and appreciate, but 1, 2, 3, 4, 5, 6 weeks of declining histogram bars, showing that momentum isn't, or strength isn't quite enough to push it through higher. As you can note, 1, 2, 3, 4, 5, 6 weeks also is the last time we had the strong run-up until we hit resistance at 37.50. RSI, I could have given it a flat indicator, but it is turning up higher for the week, still showing that momentum is pulling in. Stochastic, again, we crossed up higher, showing that more momentum is with the stock. Looking at the 6-month daily chart, each day, not a ton of movement. The volatility isn't quite there. Monday, Tuesday, Wednesday, Thursday, Friday, we did see an appreciation throughout the entire week. We closed at 37.73 for the day on Friday, up 31 cents or 0.83%. Interesting to note, we may have a MACD crossover here. Again, a strong buy signal indicating that strength is with the stock. We could see Suncor continue to move higher, and for those who are holding Suncor at much higher prices, this move is sure to make you happy. RSI steadily moving higher, not at a very fast rate of growth, and the stochastic, we are at an inflection point. I would expect it to head lower next week. Just looking at the stocks themselves, maybe come back down to 37 before moving up. Momentum does seem to be pulling away slightly on the Friday, but that could be due to the stock closing lower than its high. Royal Bank of Canada, 52-week high over the last 3 years. Could possibly even be all-time high. I didn't go back far enough, but 3-year weekly chart, the highest it's been in 3 years. Closed higher than we opened significantly. We see growth on the MACD and the MACD histogram. Histogram bars have seen 3 weeks of continued growth. Strong sign strength is with Royal Bank, and we see the MACD continue to appreciate. RSI has started to break through the 70 mark. May not have a ton of room to continue to grow, but again, will move higher. Stochastic, we are at an inflection point here. It looks like it would cross down, and again, I would attribute that to it hitting the high and closing lower than the high. Here's a 6-month daily chart. Strong growth from last week, on last week Friday. The Monday, Tuesday, Wednesday, Thursday, Friday, all higher closes. Great sign, especially that we closed higher than we opened on Friday. Up 1.15% or 79 cents to 69.53 close. So a great run for the week for Royal Bank. MACD showing the strength is there. RSI, again, momentum is there. Stochastic showing that momentum could be reaching its limit here, and we would see a bit of a pullback, potentially down to 68. There may be some profit taking. There may be some selling, or this could just flip on its head and continue its run over the last 6 days. Hard to tell, especially with a new 52-week high, especially with the new high over the last 3 years, but Canadian banks do seem to be doing quite well. 3-year weekly chart for TD Bank, hard to tell, but again, a new high here posted throughout the week. We did close higher than we opened for the week, another positive sign. MACD continues to appreciate, so showing that growth. Unfortunately, we do see a decline in the histogram bar ever so slightly on the histogram from last week. That should or could indicate that while strength is there, momentum is starting to stall out. We've seen pretty much 1, 2, 3, 4 weeks of the same kind of volatility. Investors may be looking to take some profit and move their capital into somewhere else, potentially even Royal Bank, or into another stock to continue their gains. Looking at the 6-month daily chart, overall, the daily movement isn't volatile. It's not a huge gain or loss each and every day. But here on Friday, we see a close higher than we opened. Potentially a MACD crossover here, which would be a strong buy signal. TD closed up 25 cents to $93, or a 0.27% increase. Unlike the long-term chart, we do see growth here on the RSI and Stochastic. Stochastic looking to plateau a little bit, but again, that could be due to the movement of the of the close being lower than the high. From the Focus 5, we're going to move now to gold. Excuse me. We see a strong appreciation for gold over the week. A slight decline here on the Friday close, but again, a strong appreciation. Over the last 6 months, gold has fallen by $90.97, or a negative 6.47%. Compare that to several months ago, maybe even 2 or 3 months ago, we had triple-digit losses. Gold is slowly starting to appreciate, slowly starting to come within this range of 12,000 or 1,200 to 14. I would say about around there. It's a very general range, but it seems to be on this sideways movement, which could be a good sign of a potential breakout coming soon. And you toss in all the insecurity about the U.S. government, the debt ceiling just being pushed further spending cuts, etc., combined with the situation in Europe and in China, you may be heading toward the gold breakout over the next several months. But again, we'll have to wait and see. It took this long just to get back to double-digit declines. Looking at the iShares Gold Bullion Fund, CGL, it closed down 0.34%, or 4 cents. It closed down to $11.67. Looking here on the Friday, I mean, it's pretty much a straight line. Only down 4 cents, not a huge percentage decline, but not a lot of movement on a day-to-day basis. MACD and the MACD histogram, we do see growing histogram bars for the entire week, a great sign. A potential MACD crossover, again, another good sign. RSI is showing a bit flat, and that's due to the potential sideway movement of the actual bullion. And Stochastic is showing, again, while strong appreciation from Wednesday to Thursday, we do have a flat between Thursday and Friday. The momentum is petering out a bit. Gold Bull Plus ETF, what we want to call HGU, not a ton of movement. Again, we see the Wednesday to Thursday. We see the increase in appreciation. We see the MACD crossover here with the growing histogram bars. RSI and Stochastic both showing the same as CGL. And again, that's due to the lack of movement between Thursday and Friday. If we had seen some stronger appreciation on Friday, both would be green and both would be saying better news. Gold Bear Plus ETF. Oh, by the way, HGU closed down 1.67% or 14 cents to $8.23. HGD closed higher by 1.22% or 24 cents to $19.99. Couldn't close above 20, but it got as close as it can. Now, again, while Wednesday to Thursday for the other two ETFs were good days, Wednesday to Thursday was a negative day for this ETF. We do see the MACD still slightly higher. I'm not going to bicker too much. Could have put it a blue. And this might change if gold prices continue to fall. Stochastic is saying not good enough. We did see a big drop from Wednesday to Thursday. And RSI is kind of in between because even despite the sell-off from Wednesday to Thursday, Thursday to Friday was essentially flat. So not a ton of movement on HGD. We did see more movement during the day within the ETF itself on Thursday. Looking at silver over the last 6 months, only down $1.35 or 5.8%. Seems to be ranging between 24 and 19. More specifically, I would say another resistance level or support level here is at 21. But again, we could have that same sideways trading range now for a while before that potential breakout. The same reasons as gold would break out as well. Something to look forward to, especially if we don't have that decline here on the Friday as we did on the gold side of things. SVR closed up 0.63% or 8 cents to $12.73. Wednesday to Thursday, the big gain. Thursday to Friday, not so much. MACD and the MACD histogram, flat. RSI, flat. But Stochastic is showing appreciation. Momentum is there somewhat, but not a full-fledged turnaround. Looking at HZU, closed up 0.34% or 3 cents to $8.91. Again, the same indicators across the board, flat, flat, and showing some appreciation on the Stochastic. We don't see a ton of movement here in the silver market just because of the lack of movement of the actual commodity. And of course, we have, last but not least, HZD, closed down 0.43% or 3 cents down to $6.96. Not a lot of movement again. MACD is at 0 pretty much, and same with the histogram. RSI is flat after that falling a little bit from Wednesday to Thursday, and Stochastic is saying no thank you because we see the decline from Wednesday to Thursday to Friday. So they're saying momentum is pulling away, and unlike gold, we didn't see the decline here on the Friday, and silver continued to trend higher. That's it for us this week, a wrap-up of October 14th to 18th. Have any questions, concerns, comments, please email me here at joelchandran@traintoinvest.com. If you're interested in learning about more what we do, check us out at www.traintoinvest.com. We do have a new course starting, I think, the last week of October. The 29th is a Tuesday at 7 p.m. Central Standard Time. If you'd like to have more information about that course, starts, costs, etc., please email me and I'll get you the appropriate information. Have a great rest of the weekend. I hope you had a happy Thanksgiving. We'll talk to you soon. Bye now.
The organizer